That's on the status areas on you.
Okay, good morning once again, ladies and gentlemen. My name is Tapiwa Bepe. I am the marketing and corporate affairs manager here at the Zimbabwe Stock Exchange. I'm going to be your moderator for today for this webinar. I would like to thank all participants that are in the call that have joined us today for this historic moment as we celebrate the listing of the Tigere REIT. Allow me to just name a few ground rules before we begin. We're going to be having a panel discussion. So we're going to be having 4 panelists that are going to be with us throughout the entire webinar. And you will also be allowed to ask questions after the formal discussion. May you kindly ensure that you have muted your mics and that your camera is turned off if you're not speaking, so that we also preserve the data of everyone that is in this place. And at this juncture, I would like to introduce our panelists for today, whom I'll also ask to turn on their cameras so that I can just spotlight them for everyone as I go through the introduction. So we have Brett. Then we also have Owen, Kura, and Kuda. May you kindly switch on your cameras so that I can spotlight you for everyone as I go through your brief profiles. Thank you. I can see that you are all ready. Okay, so these are our 4 panelists for today. I will then switch off my camera later on so that the attention is on the panelist, not on me. Allow me to introduce Brett. He is the current managing director of Terrace Africa. Brett has worked within the African real estate and asset management industry for the past 15 years. Then prior to starting Terrace Africa, he was the head of business development for Liberty Properties in Johannesburg. He was also part of the team that listed the largest property fund in Botswana and sat on the board of the asset manager for Essentia Property Fund in Mauritius. He is in the process of listing the new Tigere Property Fund in Zimbabwe, which is historic, as I mentioned earlier on, because it is the first REIT that's going to be listed on the Zimbabwe Stock Exchange. Brett holds a BCom honors degree in financial analysis, and his company, Terrace Africa, successfully raised capital for their first development fund almost 10 years ago. They're now on their 5th retail development and have a strong pipeline, mostly focused in Zimbabwe. Brett moved with his family to Harare in 2020, and he looks forward to positively contributing to the sophistication and growth of the real estate markets in Zimbabwe. A good morning to you, Brett, and welcome.
Morning, everyone. Hi.
Thank you. I'll move on to our next panelist, who is from Interlego Properties, and his name is Owen Namusi. Owen is an investment banker with over 15 years of experience in entrepreneurship, corporate advisory, and investment management. He heads Interlego's corporate and risk advisory unit and has advised on a variety of corporate transactions, including public and private capital raisings, restructurings, strategic advisory, and transaction support services. Owen holds a bachelor's degree in financial engineering. A good morning to you, Owen, and welcome.
Good morning, Tapiwa, and good morning to attendees of this webinar.
Thank you so much. Our third panelist is Kurachi Hota, and he is actually the regional property consultant with EXP Realty. Kurachi Hota holds a BCom with WITS SA and a postgraduate diploma from De Montfort, UK. He has worked as a stockbroker, property asset manager, and served as a director of 2 listed property companies in South Africa. In Zimbabwe, he was a co-founder of a $30 million startup property investment fund and later chief property investment officer for the National Social Security Authority, NASA. He is based in Harare as a regional property consultant with EXP Realty an international real estate brokerage company with assignments in SA, Botswana, and Namibia. A warm welcome to you, Kura, and thank you for joining us today.
Mangwana Nyakanaka kunim everybody. Thank you.
Thank you. Our fourth finalist is Kudakashe Mundozi, who is the acting head of ZSE Markets. He is at the Zimbabwe Stock Exchange as well with me. Kuda has a strong understanding of the financial markets, having over 13 years experience in the financial services industry, covering investment analysis, client liaison, corporate affairs, and equities administration. A good morning to you, Kuda, and welcome. Hi, Kuda, can you hear
me?
Morning.
Thank you, Tapio. Yes.
Perfect. Thanks, Kuda. Okay, so to start off with our panel discussion, we're here to discuss mainly the listing of the Tigere Property Fund that's going to be on the Zimbabwe Stock Exchange in a couple of weeks. And as the ZSE, we are actually very excited about this instrument that's going to be listed. So I'll start with you, Brett. Maybe just for the benefit of everyone that's on this webinar, can you just kindly give us a background on the Tigere REIT and how you have gotten to this point?
Yeah, thanks. I mean, these things don't happen overnight. It's quite a background. I mean, we've been in the region for the past 10 years. Our first asset in Zimbabwe was Village Walk in Borrowdale, which we started planning 9 years ago, and then we did Marandera Main. And we had been working on a few pipeline assets, 2019, 2020, when the REIT legislation started to emerge, and then finally came out. When it came out, we really were excited about it, and that really got us going. As a private investor, we are obliged to only include new developments. So this took some time to construct and to get where we are today. The assets are now trading, and we feel it's the right time to list this REIT at the moment. Yeah, it's been pretty tough being the first one. Lots of legal analysis, working with authorities. But yeah, we believe the framework for our listing is right, and we're good to go. So that's a bit of the background.
Thanks, and congratulations once again, Brett. As you say, it has been a long journey, but I'm sure it has been worth it. So congratulations once again for that. I'll move on to Kura. Kura, as a property consultant, many people might not be well acquainted with the term real estate investment trust. Can you briefly explain it for the benefit of our investors here on the call, especially in terms of dividend flow and also tax status?
Fantastic. Thanks for the opportunity. So a real estate investment trust is in Zimbabwe, it is established under a couple of sectors. One, as Brett pointed out, it was authorized post-2020, where new assets can go and be in a vehicle that needs to be listed. And then because it's listed, it's regulated by the ZSE and has oversight. But it is essentially a company that's listed on the stock exchange. I use the term company loosely so that people understand. It is a trust that then has trustees and custodians who look after it, and it owns property assets. And then for them to qualify for that status, they have to maintain certain their activities have to be property focused. And then the sweet cherry for all of us is they are mandated to pay out 80% of their net available income after they've taken off their reasonable expenses. So this becomes a very exciting opportunity for cash to flow. In Zimbabwe, the market, we are starved. We have approximately 800 billion ZWL of assets that sit within pension funds, but very little of it comes out, perhaps as a dividend or as a rental income. So here we now have an instrument that looks like equity, that tastes like equity, but pays out something as regularly as a bond. When that money comes to us, as it's paid out as a distribution, it is not taxed within the company. So you'll see that there are still 2 listed property entities on the Zim Stock Exchange. you will see 3 levels. They receive income, they pay property expenses, they pay their own admin expenses, then they pay ZIMRA a tax on their profit, and then distribute. The difference with a REIT, a real estate investment trust, is that it receives money in, it pays the property expenses, and then 80% of what is the residual gets paid out to you and I, and then it's received in our hands. And when it's in our hands, it's not taxed in the company's hands. So as a pension fund, if you receive the money, you are tax neutral. You and I, it depends on where we've put it, is in our family trust, is in our individual name. We will then account for that income and pay tax on our basis.
Thank you very much, Kura, for explaining for the benefit of our investors what the real estate investment trust is. I will move on to Owen. Owen, in the licensing of the Tigere REIT, there are several stakeholders that played a crucial role, for which they're going to continue doing so after the listing. Can you briefly explain your role as a financial advisor and also the roles of the following? Kindly, let me just mute. Charity, are you able? Okay, she's muted. Let me retake that once again. In the licensing of the Tigere REIT, there were several stakeholders that played a crucial role, for which they'll also continue to do so after the listing. Can you briefly explain your role as a financial advisor and also the role of the following stakeholders? We have the promoter, which is Frontier Real Estate Development. We had the REIT manager, which is Terrace Africa, and the sponsoring broker, MMC, as well as the trustee, CRB Bank.
Yeah, thanks, Tapiwa. Yeah, as you rightly put it, it is a very involving process when we come to the market with a vehicle such as a REIT. And our role as the financial advisors is primarily in the arena of structuring the investment vehicle, which is the Tigere REIT itself. This includes obviously structuring the units themselves, the pricing of the units as we are coming to the market, and also putting together the documentation, which includes the prospectus that we then put out to the public as a matter of record for investors to be well informed of what the REIT is all about. So by and large, we play a central coordinating role in the whole process. I think we started on this journey with the promoters, 2.5 years ago, in terms of coming up with a concept and then framing the first steps to actually then come to this position where we are. So we do play that central coordinating role with most of the other advisors to the transaction. But our core role is to advise on the structure of the REIT and how to place it in the market from a capital raising point of view. I think just briefly touching on the roles of the other parties to the transaction. The promoters, obviously Frontier, are central to this transaction. They obviously sponsor the formation of the REIT itself to start off with. They conceive the idea, we come on board, we advise them on what the steps are to bring this idea to life. And also importantly, in terms of the Tigere REIT structure, the promoters will be the ones bringing the quality assets to be deposited into the REIT. So if you look at the two assets that are the seed assets to the Tigere REIT, the promoters will play a similar role going forward in terms of bringing further assets that are in the pipeline to this particular REIT. The REIT manager, Terrace Africa, they will manage day-to-day for the particular REIT. They will obviously subcontract or employ a property manager for each of the individual assets. They will obviously liaise with the investing public in terms of the unit transactions that will be done from time to time. And they'll essentially keep the unit holders of the Tigere REIT informed of the status of the REIT, what the operational aspects are looking like, what the performance of the REIT has been over a defined period of time, and they will initiate the transactions to distribute, that 80% share of the annual income that the REIT would have managed to achieve at any given time. The sponsoring broker, MMC Capital in this instance, they are central to the interface between the exchange and the market. So they essentially introduce the REIT to the exchange and coordinate all the requirements that the exchange would want to see from a compliance point of view, as far as the instrument that has come to the market is concerned. They will also interface broadly with the market. Investors that are looking obviously for a brokerage relationship in order to access this particular asset, they are able to do so via the sponsoring broker as well. And then the trustee, ZB Bank in this particular instance, the trustee is very central to the structure of the REIT. This is a regulated entity after all, and we do have a trust deed, which is the guiding document by which the REIT must abide. The trustee plays that fiduciary role in terms of representing the different stakeholders within the REIT, but most importantly, the unit holders. So they essentially hold the assets of the REIT in trust and ensure that the best interests of the unit holders in the REIT are secured and protected across all the transactions that the REIT will do. So you find that there will be a great deal of coordination between the trustee and the REIT manager in particular, from time to time as the REIT carries out transactions, but also the trustee will coordinate meetings of the unit holders whenever major decisions are to be made by the unit holders of the Tigere REIT. So in a nutshell, I think those are really the key responsibilities and roles of some of the key parties to this REIT, Tapio.
Thanks so much, Owen, for that detailed explanation, explaining the roles of the stakeholders that are part of this process. I'll move on to Kuda. Kuda, we have noticed that at times retail investors have missed out during their IPO process, maybe due to minimum lot size. How, as a ZSE, have you managed to incorporate the participation of the retail investors, specifically for the Tigere REIT IPO?
Thanks, Tapio. So indeed, in the past years, retail investors have been secluded, especially during IPOs because of their financial muscle. So what we've done in connection with Tigere is we've actually reduced that lot size, and the minimum really is just 1,000. From 1,000, you'll be 1,000 units you can participate on the IPO. But further to that, what we've done, we've also put it on an online platform, the ZSE Direct. So for everyone who wants to register, we've tried to automate the process where you don't have to go through traditionally, you have to go through all the onerous processes in order to participate in the REIT. But now all you need to do is log on to probably the ZSE Direct platform, and from there it will navigate you and guide you through the process. And we've actually made the process quite easy for people who want to participate. For example, if you're an existing client, when you log on to it, it will auto-populate your details for you and then move you to the banking page where you then participate in the REIT. So we're very excited about it, and we've also had very good feedback from retail clients who are happy that they have been included in this process.
Thank you very much, Kuda. Whilst we're on that, let me just maybe quickly move on to Owen. What would be the key important dates for investors to know for the REIT IPO?
Yeah, thanks, Tapio. So obviously we opened the initial public offer of units in the REIT on the 28th of October, which was essentially a couple of Fridays ago. That date marked the beginning of a 3-week period during which investors are able to subscribe for units in the REIT. And this 3-week period concludes next week on Friday, the 18th of November. So investors are encouraged to bring in their subscriptions between now and Friday, the 18th. Then post that date, we will do the normal allotment process to subscribers. So as an example, in the event of an oversubscription, we will have to do a pro rata allotment to allot all applicants for units in the REIT. And this is something that will happen over a couple of days after the 18th. And we will publish the allotment results early in the following week from around the Monday, which would be the 21st in that particular week. Then obviously the big day will then come, which would be the 23rd of November, where the Tigere REIT is then officially listed on the Zimbabwe Stock Exchange, and trading of the units will begin on that particular date. So yeah, so I think those are really the key dates. So from where we are, the 18th is really the critical date in terms of investors bringing in their subscription forms and their subscription funds. We will do the allotment and announce the results by Monday, the 21st, and then the listing of the REIT will take place on the Wednesday, the 23rd of November.
Thank you very much, Owen. I'll move on to Brett. Brett, what is the composition of the funds portfolio and your investment strategy?
So as we start off, we're seeding the fund with two retail assets, one in Highlands and the one in Avenues in Harare. The initial assets are both retail focused, and yeah, I think it is our intention to keep a retail flavor within the fund, but have some opportunities presenting ourselves at the moment, which are around the commercial offices and logistics sector. So I think whilst it will be weighted probably a majority to retail going forward, I do see the investment strategy looking at other sectors that will be successful on the real estate side within Zim over the next few years. So logistics, commercial office, and possibly even a hospitality asset is something we're looking at. The fund, I just want to reiterate that the fund is an income-based fund. So there will never be substantial amounts of development taking place within the fund. So the risk profile is definitely weighted towards income type annuity type investors. The investments that are purchased by the fund will be completed. The income will be ready to be earned already, and that makes it a safer investment for investors. There's no completion risk. There's no worrying about whether your building that you are in the process of building is going to reach its rental levels or even stand vacant for a while. And that is the strategy that we wish to deploy. And that's as opposed to a development REIT, which you can also get, which purely takes on development risk. So ours is an income REIT. We believe that there's a definite need in the market for that consistent flow of dividend income. And you would have seen that even in the prospectus, we've even committed to quarterly dates for dividends. I think we're probably the first company that's put in a prospectus in Zimbabwe that will commit and even given the dates down on when we would pay those dividends. So it's something that we are trying to drive in the market, that we are forced by law to pay 80% of our net income. And that's something that we want to commit to and pass on to the unit holders as often as possible.
Thanks so much, Brett. Kra, let me move on to you. Why are REITs a good investment option, especially in our operating environment?
Our operating environment is a really tough one. So we can't theorize that we sit in a normal market and have normal instruments that are available. And the impact on human beings is that we have just under 1 million beneficiaries looking forward to pension funds performing. Those pension funds then invest in a variety of assets, including real estate, but the current real estate offering tends to be rather illiquid. Illiquid meaning you can't get in, you can't get out. Somebody may have a benefit statement that has a capital value, but in terms of money to go down to the shop and buy bread at the end of the day, there isn't that dividend flow or income that's being paid out. So in our operating environment, this comes in as an exciting asset. We've got just under $1 trillion of investable assets. We now have one opportunity where about 12 billion ZWLs of assets are coming to be available for us to purchase. The market space is needing property assets. Why? Because in the listed space, we've had a shrinking of the available opportunities. 4 of the property-based companies that were there have been bought out or consolidated into their parent. So we now have some fresh air coming in, a new asset that is high quality, immediately cash yielding, and then has treated those major risks. In Zimbabwe, the risks are, we can start and sign a contract today, but we've got underlying currency risk, we've got delivery risk, we've got uncertainty, and we pay the price for that. Here we have a promoter and a fund that is putting high quality assets that are unparalleled as an available option. You and I don't have the opportunity to go and build and buy something along Emerson Dambudzo Mnangagwa Drive. Here it is for us to subscribe for as little as 140 ZWLs. What we like about it is that the income has been underwritten. If you read the detail of the prospectus, for the first 2 years, the promoters have underwritten that the yield that will be paid out, they've already put it up. So from a security point of view, in an uncertain Zimbabwe, here we have an asset that we'll be able to get into and out of, that gives us money, and that has treated that risk, where if your property development is highly risky because bricks, cement, coordinating all of that, and currency is an issue. So here we have the opportunity, high exposure to a significant US dollar earnings base. Approximately 76% of their earnings will be in US dollars. We look forward to receiving dividends at a high level in the dates that Brett has put in the prospectus, in an asset that I can trade if I need school fees or whatever. I can segregate my investment. I can sell down a part, but I'm receiving income all the way.
Thanks so much, Kura. I'll move on to you, Owen. As unit holders in the REIT, what rights would they be entitled to? Also, does the trust own the properties? Maybe you can just clarify that for the benefit of the unit holders.
Yeah, sure. So unit holders are essentially shareholders in the Tigere REIT. So they will have the rights of typical shareholders in any corporate entity, as you will. But specifically because the Tigere REIT is a regulated vehicle that falls under the Collective Investment Schemes Act, you will find that the unit holders are protected by that act in terms of what they are entitled to within the REIT. Unit holders are able to convene a meeting similar to an annual general meeting or an EGM, as would be the case with any other corporate, to deliberate on key matters that are of importance to the REIT. But importantly also, as I indicated earlier, they have a layer of protection via the trustee, whose primary responsibility is really to act in their best interests. So all their rights, they have rights to the income of the REIT, clearly, but they do have residual rights to the underlying property asset portfolio. So to clarify, yes, indeed, the REIT does own the assets. These are not assets that are being leased out to the REIT or floating somewhere. They do sit on the balance sheet of the Tigere REIT, and I'm sure when Tigere does do its annual financial reporting, you will see these assets sitting on the balance sheet. So yeah, the rights of the unit holders are very well enshrined in the trust deed, also in the Collective Investment Schemes Act, and the trustee will play a central role in ensuring that those rights are protected.
Thanks so much, Owen. I'll move on to you, Kuda. Can you kindly highlight to us the process, the application process for retail investors to participate on ZSE Direct during the Tigere IPO?
Thanks, Tapiwa. So we've made it as easy as possible. So initially when you go onto the ZSE Direct platform, before you even log in, if you look on the top left-hand corner, there will be an option for you to register for the IPO. So in the event that you miss it somehow, when you log into the platform, again, you will see a tab that will take you to the registration of the IPO. And if you're already an account holder, it will auto-populate for you, and all you need to do is elect how many units you want, and then you will fund your account. If you're not an account holder, we've automated the process, a straight-through process where an EDS number or a CSD number will be created for you. After it's created, you then can participate in the IPO within 24 hours. So we've tried to make it as easy as possible for everyone to participate in this IPO, given the magnitude of the IPO and being history being made. We thought it would be important for the retail clients to participate on this one.
Thank you so much, Kuda. I'll move on to you, Britt. Maybe you can just highlight to us the key benefits of the REITs, especially within our Zimbabwean context, and how is Tigere trying to fill that gap?
Yeah, so I think I'll start off by saying, like, REITs is an international concept. It's not something that's been created by the Ministry of Finance in Zim. I think it's in almost 50 countries around the world. And for instance, I know in America, you're looking at $3-4 trillion worth of real estate is held through REITs. So it's a substantial structure globally. Yet in Zim, it's almost like the perfect market for it, but we've been a bit slow in implementing it. You know, Zimbabweans love real estate. I mean, for obvious reasons. It's the one thing over the last 20 years that, you know, it's kept good value, and it's seen as a safety net in times of uncertainty. Yet, you know, often they are forced, or you know, we are forced to have a residential tenant or rent out our house in Madokero or Marble Rain or wherever. And that's what we're trying to say. No, let's give an opportunity to everyone, whether it's institutional pension funds or retail clients, to also share in a Pick and Pay lease, a Simbisa lease, own good pieces of land. So in my perspective, you know, one of the benefits is just creating a broader net for investment and driving that savings pool within the country. I think a key thing for me on the benefit is that it's the one structure that almost is, you know, we feel it's been very regulated. So it's you've got a situation where in America it's 70-75% of income has to be paid out. In Zim it's 80%. So you've got a very transparent structure whereby you know at a minimum 80% of the net income or rentals earned in the shopping center are going to be paid out, and with that you get that transparent flow. You know that the company is not going to be withholding dividends, whether it's Nostro or ZWL, and it creates almost like an understanding and a go forward for the company, that after each dividend you get reinvestment, you get a drive of confidence in that business to buy more properties. I think a key point as well is that we are finding that a lot of pension funds or private investors within Zim may own a single property, and it's not particularly expertly managed. It's maybe because it's a standalone property. We are trying to create a fund which can be expertly managed by retail experts and try drive as much income from those assets as possible. And then I think finally for me, the REIT creates an opportunity for us to build assets in this country that possibly weren't able to be built before. You know, by pooling funds together, you are seeing new cities being created in the UK and the US and Australia. And often we live in a very siloed world in this country, and by pooling our resources, we're able to create new hospitals, new retail assets, new logistics assets that definitely move the country forward. And from a Terrace Africa perspective, you know, we always use the example that, you know, when we created Village Walk, there's 300 people on a day-to-day basis that are employed there. And, you know, whether it's Pick n Pay has got 85 and Rockamama's has 15, etc. But and when we created Highland Park, you know, no one from Village Walk loses their job. You just create that a whole new layer of growth. And we really feel that the REITs, by pooling our resources, whether it's institutional, retail, pension funds, and building new assets, we also get to drive quite an important growth agenda within the country that maybe has been lacking previously.
Thanks so much, Brett, for that explanation. Kura, let me move on to you. I know we've talked about the benefits of this investment vehicle, but what would be the key risk consideration for investors to know for such an investment vehicle?
And that's fantastic. As the regulator of markets, as investors, we have to know that risk is a two-sided coin. Whatever opportunity, there are underlying risks that we need to, but within that, risk is defined as a deviation from an expected outcome. So there are risks on the positive and the upside and on the downside. So firstly, read the prospectus and it will clearly tell you that this is an equity to be listed on a market. So in theory, you'll be told that an equity can possibly go to zero. So you've taken a risk. Things, we've had force majeures, we don't know, COVID, war in Ukraine, whatever. The externalities, we have the unknown unknowns, we have the known unknowns, and we have to price that in. But let's talk about the fundamentals. Let's go to what we're investing in. We're looking for income. If we're looking for income, what is the ability of that person to pay the income? So we need to do some sort of almost credit analysis on the party who is going to be paying those rentals. So we look at the listed reports in this particular asset. We can look through to Pick n Pay. We can look through to Simbisa. And when we read those reports, we see their financial statements and their ability to pay. So I think we have limited downside risk on that, but we have an upside risk that if they trade out of their socks, and I bet Brett hasn't skipped a beat at all in creating a turnover rental. If they shoot the lights out, guess what? The shareholders or the unit holders in the fund get some exposure to that. We have a second thing. In Zimbabwe, we can never forget the fear of SI-itis. Something can change. Our currency, where it is and how it is going, it's fantastic that we have the room to operate where we can receive money in dollars. I'm still to see senior counsel's opinion that can we force somebody? We have an environment where the legal tender is the ZWL. Can you force somebody to pay you US dollars? So for now, it's permitted, but I'd like to see higher rights and that we can enforce a lease that is paid in US dollars. We have a management risk when we've got these assets that are out there. Is the team on the ground able to deliver what they promise? We mitigate that risk by looking by the asset manager and what they've done. This is not their first rodeo. $120 million of assets developed, put in the ground and cash flowing. I think we can mitigate that risk somehow. Then there's an upside risk that while we're chasing the income, and we've seen it reported on that line. If we look at the listed peers on the stock exchange, there is an important line that often skews the numbers entirely, where you have a revaluation surplus. In our hyperinflation environment, where we're at the 200 and X, Y, and Z%, we keep on re-rating that underlying asset value. That asset value has not been put in the forecast because the corporate advisors have no way and no crystal ball to tell what it is, but there will be an inherent upside risk to us that what we've bought, when you make a property investment, you're buying a brick. That brick then attracts a cash flow, and then you want that cash flow to be growing in perpetuity. So you have the opportunity now in this uncertain environment to actually get on the bus and be in a position to receive that upside risk. Of course, there would be a concomitant downside risk, but I think the bias without any other options, we don't have money market. our equities have gone backwards. If you look at the half-year IPEC report, property outperformed equities. That's even before the call at the 85% decline in the values of the shares on the stock exchange. So property is the go-to sector. And within that, a quality asset portfolio gives you the risk to receive great income in very stable counters, backed by our propensity. It'll always be driven by our GDP and our spend available. We can see those numbers and keep a track on it to understand and forecast for ourselves what our dividend is likely to be. But the structure of the REIT means that dividend is coming. We're not going to get that horrible email, your board has decided in the current environment not to release dividends. In this one, they have to pay out.
Thanks so much, Kura, for highlighting some of the key risk consideration that investors need to be aware of. I'll move on to you, Owen. Considering that an investor owns the units in the REIT, what happens to the investor as a unit holder or shareholder in the event of adverse or currency movement? Is there a possibility of wiping out of value?
Yeah, thanks, Tapiwa. A very important question that obviously investors would want to have clearly addressed. I think the important thing to highlight about a REIT structure is that perhaps unlike a typical corporate, if you were to look at the balance sheet of a REIT, it's dominated by your physical real estate assets. I think if you compare with maybe a typical corporate, you find that there is a significant proportion of perhaps intangible assets that would sit on a balance sheet of a typical corporate. And when the environment does change for that particular corporate, the value of that particular intangible asset sometimes takes a substantial knock. And this is what often filters into a sharp drop in the share price of corporates. With a REIT, unit holders do have a residual interest on the actual physical underlying assets. There is a small intangible element, obviously, I think as the REIT is performing well, but it's relatively small. So in the event of, let's say, a very adverse market environment or even currency movements, I think you do have a certain hedging element that is embedded within a REIT structure, because ultimately you still revert to the physical underlying assets that sit on the balance sheet of the REIT. So investors can have a good degree of confidence. And naturally, you are going to have up and down situations within the market. And being a listed entity, it is not entirely immune to some of those market fluctuations that we can witness. But I think as the market gets to know and understand the dynamics of a REIT, they will understand that ultimately the true value of this asset is really founded on its real physical infrastructure and assets that will be dotted across the country. In terms of the possibility of wiping out value of a REIT, that is highly unlikely for the very reason that I've just mentioned, that on the balance sheet, you have a predominance of the physical assets, unless maybe there is some, crazy act of God kind of event. An earthquake hits all of the underlying assets all at once, and we wake up tomorrow and there's not a single functional asset, which is highly unlikely. So the likelihood of a complete wiping out of value is very remote for a REIT. It's probably higher for a corporate, like I said, because there are more market dynamics that are at play in terms of bringing value to a corporate. But for a REIT, even if the assets were to stop functioning and there are no rentals that are being received, at least there is some residual value of the physical assets themselves as they sit on the balance sheet. So unit holders will still retain some value in any event. So yeah, so I think there is a very remote possibility of a wiping out of value for a REIT, but by and large, a REIT will maintain value for unit holders for the medium to long term.
Thank you so much, Owen, for that clarification. I'll move on to you, Brett. The Tigere REIT is guiding investors around a 5 to 7% yield. Can you explain how that dividend is derived, and is there any further upside that investors can expect?
Yeah, thanks, Piba. It's a very simple calculation. It is the net income payable or net distributable income over the NAV of the fund. That obviously changes on a listed vehicle. I think the key thing for us is that we've been quite prudent in the numbers that we've put forward. There's substantial upside that can be achieved on those numbers. When we had to submit the prospectus and get it signed off by ZSE and Securities Exchange Commission, etc., we didn't have numbers such as marketing. We're getting a lot more income from marketing. We're getting a lot higher turnovers than we initially expected. The Pick n Pay is currently trading in the top 4 Pick n Pays in the country. According to our budgets, we're trading a lot higher. And because we're on a turnover rental, there is upside. There is upside on that 5 to 7%. Should the income increase? I think I'd just like to talk a bit more about that, because I mean we've had a lot of questions related to that, and we've seen there's been some discussion in the marketplace, and where there's no development risk being taken and still room for upside with quality tenants. We firmly believe, even looking at internationally, that the 5 to 7% is exceptional. In a market where you got residential yields offering low single digits, and you're taking on larger risk and much less liquidity, we definitely feel that our offering has a place. But yeah, we can't be everything for everyone. If you're looking for risk and you want to take on your own development, and you're looking for higher yields, well, this is probably not your investment. We are not prepared to adjust our mandate to move into a higher risk profile. We want to be that stable, safe income earner. Nostro USD, when we get it, we'll pay it out. Consistent dividends, provide as much transparency as possible. Real estate is not a complicated investment. You own a good asset in a good location, you collect the rental, you maintain value, and you distribute as much as you can to unit holders. I think from us, we're just excited to stick to the basics and deliver on our commitments, and we're pretty certain the market will follow once we do that.
Thanks so much, Brett, for that. I'll move on to you, Kuda. As the ZSE, are there any upcoming initiatives that will likely increase retail participation?
Taps, I think you would agree with me that one of the things that has been there is lack of investor education. So as the ZSE, we are on a drive to increase investor education for people to understand these products more, so that they can participate more when such events come about. So it's not just that we've given them a platform to trade through the ZSE Direct, but we believe we need to educate the market on these products so they get to understand them, and they get to understand what they can do for them. And such webinars like this, I believe, will drive that agenda. I'm hoping that we'll start seeing the benefits of this webinar soon after, and we see more people coming to subscribe on the REIT in the next few days, because they have a better understanding of the product than they had before. We've also had dedicated personnel who will be driving this agenda, who will be there to answer any questions relating not just to the Tigere REIT, but to investing as a whole. So in particular to the Tigere REIT, we have someone dedicated who's sitting there and waiting to answer any questions and offer any guidance in relation to the REIT. And then in investing in general, we also now have a dedicated desk for that.
Thank you so much, Kuda. From me, these are the questions I had for the panelists. I will now move on to the chat. I see that there are 2 questions that are in the chat. I'll also give time for those that would want to raise their hand and actually ask the panelists questions. We'll start with the first question, which is from Teach. It says that the total shares compared to those on offer, won't there be influence from the major shareholders in the running of the REIT? Maybe I'll give Brett or Owen to answer this one.
Thank you. I don't know who the question was from, but I think it's a really good question. The promoter initially plans to only sell down 35%, so that it becomes a very relevant question. And it's something that we've been aware of and knew that it was going to come up. I think firstly, it's not a new occurrence within Zim. It does occur in other listed shares, and as per the REIT, we are subject to the ZSE listing regulations, and there will be no undue influence on that. The trust deed specifically deals with this as well, and the trustee is mandated to ensure that there's fairness for all unit holders. Just on a last point there, I mean, no, the promoter's plans is definitely not to remain at that level, and they do plan to sell down over time, and this this will take away the issue of this question as well.
Thanks, Brett. I don't know, Owen, would you want to add, or you can take the next question that I have?
Yeah, I mean, just to add, I think we often get questions of control to say, oh, isn't there an element of excessive control that is residing in the hands of the promoters because they own a substantial proportion of units? I think if you look at the structure of a REIT, even if you hold a substantial proportion of units in a REIT, you don't often have the same sort of control dynamics that you would with a typical corporate. So the promoter, for instance, cannot just say, look, I own 65% of the units. I'm just going to unilaterally decide, since I'm the majority, to go this direction or that direction for the REIT. That does not work, because this is a vehicle that is regulated, that has to abide by the Collective Investment Schemes Act. And as Brett highlighted, there is a trust deed, there's a trustee as well. So all those different layers ensure that even your most minority of unit holders, their interests are protected. And so the majority unit holders cannot just bulldoze their way through and get whatever they want at the expense of the minority.
Thanks, Owen. I'll also give this next question to you. The REIT is mobilizing funds in ZWL. How are you going to hedge against devaluation?
Yeah, look, I think it's a question that we obviously grappled with when we were structuring this particular vehicle. But the important thing, I think, it really goes down to the underlying structure of the REIT. As we indicated, this is not a development REIT, so we are not raising money to develop assets per se. In this IPO, we are essentially raising funds, which is essentially a dilution of Frontier, who are the developers of the two assets that they have seeded into the REIT. So from a devaluation point of view, we do not run that risk per se of, oh, we have raised ZWL, it's sitting in some account there, and we don't know what to do with it quickly. I'm sure obviously as Frontier gets funds, they will channel them to downstream projects, and they've become reasonably experienced in this environment in terms of how to do that, paying off contractors for subsequent projects and that sort of thing, which we largely can still do in Zim dollars anyway. I think it just comes down to a case of speed of deployment per se. So yeah, devaluation really isn't so much a concern for unit holders, because this is not money that is being raised and then sitting on the balance sheet of the REIT per se in this particular instance. So that sort of structure of the REIT does cater to that particular aspect.
Thanks, Owen, for that. The next question is from Rabiro Mangena. He says, are annual asset revaluations distributable at the 80% threshold? Another way, do the unit holders enjoy any capital appreciation of the assets?
Yeah, I don't mind answering that question. So the annual asset revaluations, there will be a reval that takes place annually. and that will be announced within the reporting of the REIT. The REIT is only obliged to pay out net income, so it can only pay out what it's got in its bank account. So revaluations are not derived as income. However, if a property is sold, if it's traded and there's income received, that income is paid out. So the revals will come through in the NAV on the actual on the balance sheet, and that will hopefully be reflected in the share price, and that is where you will gain your appreciation, but it will not be paid out as net income, which is only related to the actual cash being received from tenants or other similar cash.
Owen, I'll give this one to you. I think you briefly touched on it. With the distribution of 80% of the distributable income, how will the fund finance growth? I think you partly touched on this as you were answering the other question.
Yeah, so I think in terms of growth of the fund, obviously we are looking at more assets being added to the portfolio. The sponsors or promoters, Frontier, do play a central role. So you find that for future assets that can come to the REIT, these are financed off the balance sheet of the Tigere REIT. So Frontier basically takes the responsibility and finances those developments from its own resources. And then when those assets have been completed and they are operating and they are ready to be seeded into the REIT, they will come through, obviously, the advisory board together with the trustee, and the REIT manager will then determine if that particular asset is a worthy addition to the REIT itself. So again, this is not a development REIT. So while it is possible maybe at some time that we can probably do a rights issue to finance a potential acquisition of an asset in the future. But by and large, I think we have found this particular structure that we have with Frontier taking, the initiative, developing these assets and then bringing them to the REIT. Frontier will get units, obviously, every time they seed an asset into the REIT, and obviously existing unit holders are able to benefit from, the higher revenue kind of position that can come through. I think over time, I think in the medium to long term, the REIT will essentially drive its own growth, if you will. I think you will notice that as more quality assets come on board, as the REIT performs from an income point of view, there will be a lot of interest even from other assets that Frontier are not developing to see if they can actually be incorporated into the REIT. I think we've already had a couple of conversations already with one or two such asset holders. But again, that's the decision that will be made collectively by the key parties that are responsible for that.
Thank you so much, Owen. Kura, I'll give this next question to you. I know when we started, you explained a bit about the tax. There's a question that is the dividend or income taxable, like what happens on the normal equities?
Okay, and that is the beauty, and along the way to get us to have REITs, there was a special tax dispensation that was required. It came right out of the Minister of Finance office in 2022. So without getting it overcomplicated, a REIT is a tax neutral structure. So it will receive rentals and pay out what it needs to pay out. Within Tigere, there is no tax payable. When the tax comes out to you and I as a unit holder, we then account for it within our tax returns. So me at a personal level, I'll pay at my personal level of tax. My pension fund will pay it at a zero tax because it doesn't pay tax. So the fund itself will have quite juicy financials because they don't have that tax line within it.
Thanks so much, Kura, for that explanation. Brett, let me give this next question to you. I think we've got one more left, which I'll also give to Owen, the last question. Brett, your question, given that your income is plus 70% in USD, does it follow that dividend payments will be 70% in USD and balance in ZWL?
Yeah, it's a very good question because you know, we are currently collecting a lot of our rentals in Nostra, and it is our intention to pay out as much as we can in Nostra. So that is that is definitely the case. We have the added benefit, though, that we're also trying to pay as much of our expenses in ZWL. So that means that even though we are collecting maybe 70% plus in USD, maybe we'll be able to pay more of the net distribution in USD. As we know, things change month on month within the country on the available of USD versus ZWL. So yeah, we will see how things go. But currently, as we stand, we probably are collecting more than 80% of our income in US dollars. I mean, maybe just throwing also just something back to Kuda. So I think that previous question was also around the dividend income from a ZSE perspective. So I don't know if there's a just to finalize that question. Kuda, I don't know if there's an answer there.
Yeah, Brett, so for dividends, they do attract a 10% tax when you paid your dividends. And then obviously on disposal, it is treated, you are subject to the withholding tax, just like normal equities are.
Copy.
Thanks, Brett. Thanks, Kuda, for that. Owen, I'll give you this question and also this to Kuda. So Owen and Kuda, what is the benchmark index used to track performance of the REIT, considering that this is a new product on the market and we do not have similar listed products? So maybe let me start with Kuda. Hi, Kuda. Okay, Owen, you can go ahead. I think Kuda is having challenges with this mic. You can go ahead, Owen. Should I repeat the question?
Yeah, sure. Yeah, sure. I think from a benchmark point of view, obviously this is real estate, so we are going to naturally look at some of the existing listed real estate counters, and then the ZSE property index, if you will. The hope is that over time, obviously, as more REITs come on stream, we will begin to have a dynamic that we can actually then follow in terms of how REITs generally operate, because there are some slight differences between your regular listed property counters and your REIT structure. The property counter is a corporate, a REIT is a collective investment scheme, so those differences are there. But certainly Tigere is blazing a trail, and I'm pretty sure there are more REITs that are coming in the pipeline as we get into 2023. And I think out of that, we can perhaps then have a REIT index, so to speak, that investors can actually then track and follow to see just how this particular asset class is performing. But we can also sort of get a reference point from REITs in the region, South Africa, Kenya, being typical examples, to also just see how those REITs have been performing, because the fundamentals are essentially the same in any event. You have real assets that are earning an income, distributing that income, and seeing what the yields are right across the board. So we can sort of do some regional benchmarking, but the intention is that in the medium to long term, we will have our own local sort of REIT index that we can then track.
Thanks, Owen. I think I can add on now. Yeah, I think just like Owen said, so to begin with, we're going to have to use the regional one, particularly South Africa. And then we are looking at the pipeline of REIT listings. We should have a few more coming in Q1, going into Q2 next year. And then we're going to localize it, and we can form our own index on the REIT, which will give us a more true reflection of how it's performing.
Thanks, Kuda. Last question to you, Brett. Seeing that a lot of the income on the REIT is in USD, is there a possibility of listing and migrating the REIT to the Tigere REIT on the VFX?
Yeah, that is a great question that I've been receiving a lot this week. And I'm going to answer it in two ways. So there's a couple of interesting dynamics with regards to REIT in Zimbabwe. First, we would have loved to have put Village Walk as part of the REIT, but we were not allowed to because of the legislation being that all assets had to be developed post 2020 legislation. So that's the first one. And the second one is around the 80% distribution of income. And what we have is that on the Vic Falls, you have, come 23rd of November, we will be the only company within Zimbabwe that will be mandated by law to pay a dividend. And should we at a time be collecting a lot of Zim dollars in rentals like we were 3-4 months ago? I mean, we all get short memories, but that was happening not too long ago. We will then be sitting with a big ZWL bank balance that is going to be very hard to convert and list and pay out that dividend. As such, we can't sit with that risk that we can't pay out the dividend, we lose our REIT license, we then have to be taxed. And on top of that, we will lose a lot of investors and our returns will diminish. So whilst for now, yes, we are receiving 70-80% of our income in USD and it could work, things change pretty quickly. And we can't take the risk of not being able to pay out a dividend, unlike the Nat Foods and Symbises that are looking to move to the Vic Falls. If they don't want to pay a dividend, they just choose to not pay it, invest in capex, and do other things. Whereas as a REIT, we're obliged to pay, and therefore the current legislation of only US dollars at Vic Falls just hamstrings us a bit.
Thank you so much, Brett, for that. I think due to our time, I'll have to cut on the questions since people still want to engage. So maybe what I'll do is if you can share your contact details in the chat for any further questions for the participants so that they can engage you. But I'll go around the panelists, just your closing remarks. I'll start with you, Brett.
Yeah, I think first of all, I mean, we didn't see it this way initially, but it's a great way to use your US dollars, use your Zim dollars to get a Nostra return from some of the tenants. And then, yeah, it's definitely our intention. We have a vision to double the revenue within the first 3 years of the of listing, and we have big ambitions to grow this fund. We do not think it will be hard to grow it fairly quickly. We are chatting to a lot of asset holders, and our pipeline is full, and we're excited, and hopefully some of the participants on this call will join us for the ride.
Thank you so much, Brett, for those parting remarks. I'll move on to you, Owen.
Yeah, thanks, Tapiwa, and thanks to the various attendees of this webinar. I think as the advisors to this REIT listing, we are quite excited by the feedback that we have been receiving from the market. I think participants are very much engaged and excited by this new instrument, this new vehicle that has come on board. And we certainly look forward to further engagements in terms of other future REITs that are coming onto the market. I think we've really welcomed some of the questions that we have received from the market in general, and we've done our best, obviously, to clarify any issues, particularly because this is a new asset. I'll just highlight, of course, that we do close the subscription window next week on Friday, the 18th of November, and then we go on to list on Wednesday, the 23rd, the following week. So for those that are still interested in bringing in their subscriptions, you still have just a week and a half or so before we close it out, and we certainly hope to meet you as property owners via the Tigere REIT when all is said and done. Thanks.
Thanks so much, Owen. I'll move on to you, Kara, for your parting remarks.
Imagine the opportunity. Somebody's done the hard work. They've done the creation of assets. They've taken all of that risk. And they're saying, here is a basket within ZWL that you can pick up your phone and you can subscribe using C-Trade for as little as $28 a share. You're going to buy the collective efforts of the biggest companies in Zimbabwe, Pick n Pay, Simbisa, Puma Fuel, all of those people paying you rental. Your position was entered on ZWL, 76% escalating in the future is going to be received in USD, hopefully to be distributed similarly, and you own the asset in perpetuity. It's not a short-term instrument. It's not a note. You are a unit holder in the physical assets on the ground. I don't know if you're waiting for a bell to ring in getting that exposure. You take a position in the asset and you receive the income in perpetuity. I don't know what more we can ask for in this environment, and hats off to the developers for creating this initiative and giving us the small participant. The small participant is highly favored in this particular offering in that I believe it's 10% has been set aside for the small guys. For that 140,000, you don't need to look those gold coins. If you want to go there, those are not going to give you a dividend payout. They may protect value, but for the smaller ones that are coming out, you are protecting value. Real estate does three things: protects value, it grows in value, and it cash flows. Here it is.
Thank you so much, Kura, for those closing remarks. I'll hand over to Kuda for your closing remarks.
Thank you, Tapiwa. I think as the exchange, we're extremely excited about this. It is history being made. And we are also particularly excited by the fact that the retail investors have been included in this. Hats off to you, Tigere, for that. And we hope that it won't be the last one, and we'll see more initiatives of this nature coming in. And we are excited to see the listing on this on the 23rd. And hopefully we will be also broadcasting it through the ZSE Direct so everyone can be involved in the event. Thank you.
Thank you very much. Now it gives me this opportunity to thank all the over 80 participants that were present from the time that we started up until now. We truly appreciate you taking time to come through as we were discussing the Tigere REIT IPO, which is going to be listed on the 23rd of November. I would like to say thank you to all our panelists for taking their time to come through and educate us on the benefits, the risk, as well as what the IPO is all about. Thank you to Brett, and congratulations once again. Thank you so much, Owen. Thank you, Kura, and thank you, Kuda. We truly appreciate you taking time. And thank you to everyone that was present on this call. It would not have been possible if you guys had not logged in. We will avail the recording on the ZSE social media platforms, so I think you can check from the afternoon or tomorrow. It will be available. But other than that, from me, I would like to say thank you very much. This was very informative and very engaging, and we always appreciate you coming through as our clients to come through and learn, and also the feedback that we received and the questions that were there. Other than that, I wish everyone a very good morning and enjoy the rest of your day. Thank you very much.
Thank you.
Thank you,
everyone. Bye-bye.
Thank you.
Thank you, guys.